when you're building new ventures, particularly in this context, beyond banking, most of what you're doing is built off assumptions. Whereas when you're building a new bank product, you've got maybe not everything locked in, of course, or everything will work exactly the way you think it will work, but you have some models, be they financial models, distribution models, go-to-market playbooks. There's infrastructure that would say this is the right way to launch a new bank account or a new card, whereas ventures, there's no playbooks, or there's very few playbooks for executing those things repeatably without assumptions.
Yeah, and I would say even within banking, the more far afield you go from the core, the more far afield you are, the more the risk increases as to whether or not it's going to work. So like if you're in the mortgage business and you create a new flavor of mortgage, probably a good chance it's going to work. If you decide I'm going to get into a totally new business like buy now, pay later for, e-commerce, I mean, again, you could argue it's a bank product, it's a loan, but just because you do loans doesn't mean that one's going to be successful because you've gone farther from the core. I think that's pretty obvious. So the further ways you go from here, the more challenge, more risk, and hopefully more upside because, you're also playing in a space where maybe it's not as congested, those sorts of things.
Mike, thanks for joining us today. The three of us met, it's already many years, like 2017, when you were first starting RBC Ventures, and we got involved at that very early stage. I think there were about 5 people there. The office wasn't even ready, and everyone just jumped right in. And the goal of RBC Ventures, the way you stated it, was to go beyond banking, which was to build new ventures, but also invest and acquire startups. You were at RBC Ventures, and we were working with you till about 2021, so it's been a few years. And today, I know there are a handful of ventures that are still scaling inside of what is now called RBCX. Myself, having been involved from the very beginning, I still find the story of RBC Ventures fascinating, in part because of how bold a step it was for the bank to take. So let me ask you this. We'll start, jump right in. What convinced RBC's leadership that going beyond banking through RBC Ventures was worth the investment and the risk?
Yeah, I think, our senior leaders assembled a group of us, probably, in 2015, to really think about the future, to think about how do you drive differential growth in an industry there. Many of the products are commoditized. The world is digitizing. New threats could emerge. Big tech platform players could come into your space. And so, we looked at kind of the offense and defense of that scenario. And then we put a big goal out there, which is like, how do you double the number of customers you have under those conditions? Which is pretty audacious when you think about it, especially if you're already the largest. And as we thought about it, and for me personally, as somebody that always ran product businesses, I know what it's like to compete. Like if you're in the mortgage business, people care about rate. So, how do you get 2 times more than the next guy if everybody has rate? And as we thought about the situation, it just, we traveled around. I mean, we looked around the world at different models, and it just became obvious that the answer was to go beyond banking, to solve more than just that problem, to enter kind of adjacent spaces. Because if we were right on the problem that the industry is a bit commoditized and people don't really find this checking account sexier than this checking account, but you still want the checking account, what's the way to do it without always going head to head with like 5 other behemoths? And, that's really where the logic started. And then, as we started getting into the venture building and asking people to think about adjacent spaces, like so many things are adjacent to banking. And the ideas started to, flourish, and, it just started getting really interesting. So that was kind of the impetus. And that was before we called it venture. And, that was literally when we were just focused on this. How do you do twice as much?
I think it's really interesting. Back to that time in 2017, RBC had a lot of innovation assets. I think you had about 7 different innovation labs. Borealis AI was happening already at that stage. You had an Orlando lab, I think, focused on payments. It must have been really interesting. How did you frame that opportunity to those other stakeholder groups to also get that buy-in?
Because I think there's horizons to innovation. right? I think you just have to put the right framework around it. I mean, RBC is a very large institution. AI applied inside of, the big institution, there's a lot of innovation that can come from it. But, this topic of, and we were very focused on how do you win more clients through this? So I think it really was about setting, the kind of parameters of innovation, right? And if you say, well, one level of innovation is, innovate who you are, that might lead you to subjects like RPA or AI or different initiatives like within. If you say, how do I win significantly more businesses by starting not in the industry? It just is a different it. And I wouldn't classify them under the same basket of innovation. I think they're very different things. And I think organizations can be innovative in lots of places, and lots of different ways. So, because oftentimes like venture building, venture studio, they they tend to get wrapped under that umbrella of it's all innovation. And I think it's a horizon thing. Like, today is Horizon One. People on Horizon One should probably be working on Horizon Two as well. But then, this, if you want to go from banking to medical billing, is probably like Horizon, three or four, is how I would look at it. And that's kind of how I framed it.
That makes sense. So you mentioned, you're looking at adjacencies and you realize there's a lot of adjacencies to banking because banking touches just so many things. And you mentioned medical billing, which maybe we'll have a chance to talk a little bit more about, Dr. Bill and what you did there. But I know when things were starting to take shape, you sort of created four pillars or four groups. There was B2C, which makes sense, B2B, auto, and home, because those are four sort of the way the bank thinks about those different businesses. And I remember at one point talking to the B2C team, and we're like, but the canvas is open. We can do anything in B2C. And we're like, are we doing dating? Are we doing pet, things related to pets? That's a big market. And people were chasing all kinds of random things. So, as you were trying to bring shape to RBC Ventures, how did you think about those thematic areas and start to make decisions around, well, what do we do and what don't we do? And how does that fit strategically in with the bank?
Yeah, I mean, again, admittedly, in early days, the canvas was wide and there were some ideas, but I think through natural evolution of something like this, right? Like ideas become clearer, and folks gravitate towards the things that are getting traction. So but as we thought about the world, we did say, there's only three sources of net new bankable population growth, right? Kids becoming a certain age, a la Mido, right? Newcomers arriving, a la Arrive, and new businesses starting, Owner, right? So, like, and you didn't need to do more than one really good one in each space. You just need to have a really practical reason for why that was where you were kind of laying down your footing. And so, the power of the group mattered. And so as, people kind of coalesced on things, and, they got closer, they got closer to the strike zone, as far as what we were trying to do. And I think that just came naturally. But like, as you said in the beginning, I think you have to align on a big problem and you have to have a lot of conviction for it. Right. So it's got to be, and conviction can either be you're so excited or you're so scared, whichever, but it's got to be big. That gets you started. And then you got to start assembling people. You don't want to slow it down by probably putting too much structure around it initially. Ideas will start to flourish. I mean, you guys were there for it. I mean, it was a little chaotic in the beginning before it took shape, but we
a little chaotic.
I mean, we also could have spent 3 years putting a framework around it.
Agreed.
Yeah. And we wouldn't have moved forward. So, I've thought about it over the years and, what I could have done differently and what would have been better. But, I think at the time it was so unique that, you just had to trust that if you hired smart, creative people and, you had a North Star, like eventually, blocks would get built and you could use those blocks to build on top. And, I think at the end of the day, knowing that there's still, 5 or so of whatever number we did, like 18, that are doing well in the market. I mean, I think that's pretty good.
I was just going to say, to me, it felt like we were building the playbook, building the operating model while doing the work. It was sort of doing both at the same time, as opposed to implementing a rigid structure on top of everything and then making sure everybody followed that rigid structure because that was the quote unquote perfect way to build things. We were just sort of building and designing the playbook and the operating model while simultaneously actually trying to build new businesses.
A lot of that came from your guidance, right? Which is, in a traditional organization, I mean, I've been doing banking for 35 years, right? Like if you're going to do a big implementation, you'd start with, a solution design document that could be 1,000 pages where you'd write out chapter and verse, everything it had to do, all the logic, et cetera. And that could take you a year of a lot of people. And then you'd contract it out and then you'd build it. And then 2 years later, you put it in front of a customer, whether it was internal or external, and decide whether or not it was good. This idea that if you had an idea like, get digs, you had an idea you could pay rent with a rewards credit card, and you create like, a stub page and just see if you could get traction with people commenting that the idea is good. That took you all of but a couple of weeks and it didn't cost very much money. So, to me, it's just reversing it. And the reason I think it worked is because it wasn't like banking is a big, serious topic. It's got to be perfect. And so, of course, you go through these processes. But on some of the other stuff we were doing, that gave us, reasonable courage. That you could just put the idea out there and see if people, see if it resonates with people. And I think it's a different way of doing things, but, I think it worked. I think it allowed things to happen quickly enough that you'd get a sense pretty early, is this going to thrive or is this like kind of a dud? And then you recycle your resources and you move on.
Yeah, I mean, we've been doing this for almost 10 years. And the amount of opposition we normally see and the speed at how a lot of these organizations work is not at the pace of what you were able to accomplish, which I think was quite impressive. I think back 2017, I think the time really does matter in the context. We met July 2017. I remember we had an ecosystem offsite on kind of the strategy. It was like around October. And then publicly, you went out there and announced that we were collaborating to create new ventures. And so within a span of 6 months, normally people won't have the courage to actually even make an announcement that they're doing this publicly. But also you had ventures in flight. There were, a good collaboration partnerships with core ventures that were coming into the environment of RBC Ventures. What was your thought, or maybe even your own surprise, what there wasn't that much opposition to kind of go forward? Was that really attributed to kind of your willpower and desire to do this, or was it just great alignment at the executive level?
I mean, our CEO is a dynamic guy, bold vision. He assembled people appropriately. He supported. I mean, it definitely wasn't me. I got to do the work. But it was with a wrapper of support at an executive level, because this idea of really wanting, not saying it, but really wanting to problem solve, like how do you 2x what you're doing, or how do you? I mean, it's it is very unique in this industry, to have that kind of leadership and support, and to really take on bold things. So I mean, it was it was an honor for me to do it, and especially doing it at the tail end of my career was, a lot of fun. So, but I would say a massive team effort, and important to remember, like when this ball all started, kind of rolling, most of the people weren't even in the chairs they ended up in. So this was like, I was still running personal finance. So I was the guy trying to figure out how do you acquire 2 times more mortgages without giving up interest, without giving up rate. And so like we were all struggling with the same thing. It was just that we got organized and assembled in a way that allowed us to think about it in a broader context and say, okay, well, in my day-to-day job, 90+% of what I do is running the it. I don't have a ton of capacity to reimagine the future of the it. And so maybe the answer is we need to have a second speed. And if we were going to do that, how do you do it in a way that, the organization is comfortable? And I think an important part was, again, we all thought of this before we had, titles of this is what you're going to do. We all just said it as a bunch of operators. Like, here's what, this is, the challenge. And so I think the impetus of eventually what led to that, was, again, it was framed, by a bunch of business people who really just wanted to figure out how do we win differentially.
I'm glad you brought up Arrive and newcomers as a target segment. Sort of, to the point you made was there are not that many segments where there is no banking. Newcomer comes to a country, they need a bank account, they need to set that up. So that was one of your targets. But the reason I find Arrive interesting in part is because there was also a newcomer team in the core bank. So you have a newcomer. Of course, RBC recognized newcomers as a target customer before RBC Ventures happened. So you have a newcomer team inside the bank doing a whole host of things to market to that customer group. RBC Ventures forums, you create this new venture called Arrive, which takes a different approach. So why tackle it a different way? How? And then I think really the core is, or the core challenge is, how do you balance what the core business wants, what you're doing? Is that really H2 or H3? That challenge of driving value back to the core versus doing things that are in fact, completely outside of the core. We saw that a lot. So Arrive is just a good case study of that, because you literally have a team inside the bank doing the same thing.
Yeah. And the team inside the bank that was doing the same thing used to work for me in the previous job, that I was in. One, on the banking side, there's other things that you do, right? So you can't view it as it's all about winning net new, right? Because a newcomer can come into a bank and open a checking account without knowing that there's like a newcomer group. Newcomers have different needs, right? Like they have different credit needs. They won't come with a credit report. So a lot of what, the internal teams have to worry about is, how do we retrofit what we do, to be supported? I think where we tried to have Arrive is, more in a pre-arrival state, trying to hit on topics that we're not banking, right? Like we talked about things like when people arrive in the country, they don't have medical insurance for the first 90 days. So is that really where could that be the tie-in? Now, with many of these, I don't know that we got it right, but we explored, because, like with owner, that one strikes me that if you could solve the point of incorporation and the point about the product being somewhat commoditized, you're the pipe that's convenient in there. I think those worked well. I think there's others where, we probably could have experimented longer and done things, but like, any organization, you got to recycle resources. We had some ventures that were scaling. And so, but, I think at the core, what you're getting at is, again, it's whether you consider it two speeds or you'd say one, like the here and now is vertical and ventures is horizontal. I think in any organization, those are constraints, right? Like in a legacy company, and they will create friction. It's somewhat unavoidable because one has to pay for the other, right? This one creates earnings, this one creates NPV. So, I think one of the most important things that came out of all of this is learnings. Now that I'm a venture capitalist, I'm on the outside of the system, and I talk with people around the world about, their own. I talk to them less about an idea, like, hey, have you thought about doing this? I talk a lot about the structure of getting this right and what kind of appetite you have to have. Because, ironically, if you're wildly successful on the horizontal, it actually has a more punitive effect on the vertical in the here and now, right? Because let's say you knew if you spent $100 million on marketing and you did it all in 12 months, you could win 100% of market share in the adjacency, but it would create a hole in the next 3 quarters. It's not immaterial, right? But I think it's important that the companies have the discussion, right? I think we had a great organization because we were aligned. We talked about stuff early. We had huge support from the top, which was awesome. I don't know that everybody would have the same set of ingredients that we had. But I do think, at least talking through what potential, challenges you'll face, including the challenges of if you are wildly successful. Because again, somebody inside will see that as a challenge and not as, and I've talked to people all over the world about this, and it's a pretty common thematic, right? So, and so there's value just in the exercise and in the process. But net, I think we tried to explore to figure out if there was something as intuitive as incorporation, in this other space. And that's, I think, how we approached a lot of these.
Yeah, I think portfolio strategy became such an important way you approach things. I know when we first met, you were talking a lot and asked us often, can I just buy this? And then I think I saw this change in this orientation because you're such an obsessor and such a passionate individual that wants to get into these ideas. So what really was that helped you make those decisions on either to build, invest, or to buy? Like, how did your thinking change in the first year of RBC Ventures? And obviously now on the outside as a venture capitalist, you have a completely different lens, but I would love to, dive into some of those insights.
Yeah, I mean, I think in the beginning I didn't know what I didn't know. I was more of a builder than not. I was a product guy. And so, this hypothesis of come up with ideas and build it, maybe it was just part of my legacy. Um, but learning how hard it is to achieve product market fit, learning how hard it is to achieve like appropriate economics, and looking at the successes of some where we either bought or had some augmentation, like founded with owner. Um, I think my thoughts changed, and if I was writing the novel of it today on things I would have done differently, I probably would have deployed more capital to seed certain things, because I think you know it's more of a complete picture at that point, than when it's just on a whiteboard. And there's some I look at today that I might have done, I might have stuck with, but in the confines of what we were trying to do and balancing this vertical and horizontal, I did care about a clear path to profitability and earnings, even if a lot of it was coming from, the selling of bank products. But you look at we entered the rental business. We had this idea that people would pay, rent on a card. And I loved it. The people loved it, but I couldn't get my head around, well, how do you make that work if the only thing they're doing is paying their rent and you got to pay the cost of, kind of interchange. But now you look at Built in the US and so I mean, again, to me, it was all a win because whether it's standing or you learned, it's like experimentation is really important. It's really hard being a legacy company, 150-year-old company, and you're competing with people that are getting, inexpensive capital and, going out there. And so to me, the whole journey was valuable. I don't look at any of it as, anything but. And there's so many things that, RBC and other banks are still doing today. I don't care if you call it ventures or this or it's, everybody is at it, right? They're all trying to solve for today and solve for tomorrow, and they're doing it in interesting and ways. And what I love about what I get to do now is I get to see all of it, where before I kind of only saw my part of it. And so, and I try to share, and I talk to ventures all the time that would have never thought of partnering with a bank, and like, oh, you guys don't get, let me explain why this could be really good for you. And so, now I get to have the benefit of doing it, all the experience, the ups and downs, and, just try to help the ecosystem where I can.
Right. It sound Digs is you've mentioned Digs a couple of times, pay your rent on your credit card. I remember lots of people love the product, particularly folks that can't remember the name for them, but people who love points optimizers. People who love optimizing points was like, now I can leverage my credit card to pay my rent. And, you mentioned like it didn't quite work out, but there's examples in the US, there's examples in Canada where those businesses do in fact seem to be scaling. It strikes me like part of the challenge there was, trying to fit the business model of something like Digs into the business model of the bank. And that balance between those two things, similar to other businesses you had where you wanted to sell through, bank products. So it feels like Digs maybe suffered a little bit from the, how do I make this work with the bank's business model? But then Owner, which you've also described, had a perfect connection, which was when you want to start a business, you use Owner, and Owner makes money doing that. And then after you started a business, the most logical thing you need to do is open up a bank account. And that one seemed to be like a very strong strategic fit, whereas others just maybe didn't fit quite with how the bank was selling products and monetizing in its business model.
No, I don't necessarily think that's the case. I mean, I think it really just came down to I couldn't figure out how we were going to make money. I think people wanted something and it had great value. And I think that was part of the discovery of product market fit. But then there's this other side that you need to figure out, how am I going to monetize? And I don't think that the people would have paid a fee, right? Because, to also then earn, the points. And so, but again, as we talked about in hindsight, if I felt like I had unlimited time and resource and we were doing a lot of these at the same time, I mean, maybe, but now being a venture capitalist, I mean, having X amount of resources to achieve, Y by a certain time, it's the nature of the beast, right? And so, I mean, I think it's, it's just a learning experience. I think it's interesting though that we hit on some topics that, years later, other people are hitting on, differently. But I think just because you landed on a square doesn't mean that you know the whole answer, right? I mean, you still have a lot of work to do. Just because you figured out, like, you can't just say newcomers. Oh, we know we got that's you still got to figure out what's the it, and if there is actually an it, which in some cases I don't know that there is yet. Um,
Yeah, I was going to say timing and stage really matters. I mean, the lens you have now on the outside is being more of a kind of a Series A and beyond investor, right? And a lot of these ventures do need more time to marinate. There isn't the direct connection as Ben described into how you make that money in the business model. I think, it's interesting to think about the roles of unlocking other assets quicker. Like you described, like the power of corporate startup collaboration and how you're really championing that even now on the outside. What other advice would you give to kind of leaders, executives about how to really facilitate corporate startup collaboration faster? How do we get the pilots faster?
I mean, part of it is part of it is to land on the right idea, right? Like when you're a banker like I was for so long, you're immersed in banking. So your mind isn't necessarily totally free to, you know, look at the whole universe and say there's a different way to get banking without banking, right? So you got to kind of, I think you got to have the freedom to step away and come up with an idea, and you got to develop some conviction around it. Because the one thing at the end of the day that I think is true in all cases is, at least in Canada, I mean, every bank here is pretty big. And so if you're going to do something, it needs to be pretty big, right? Because otherwise it's just going to be a peanut inside of like a big thing, which means, it's got to be really important. You got to be excited about it. You got to put your shoulder into it, because if you're not willing to do those things, it'll just be an interesting also that you have going on, but it probably isn't going to be a needle mover. Because again, you think how big it has to be a needle mover in the scheme of some of these things. And so that would be my advice: is you got to figure out, what are you trying to solve? Open the aperture so that you could think about it, or bring folks in like you guys to help facilitate thinking about it like differently, right? Because and then building your conviction, and then really saying to yourself, I'd put my shoulder in this. You guys probably remember me, I would say, fail fast, but fail fast big. And what I meant by that is, not that I wanted to see somebody, like, do a whatever they call that thing in skiing where you like garage sale.
What
That wasn't what
wipeout?
I was, wipeout, whatever. But that's not what I was trying to say. What I was trying to say is, if you're gonna kill something, or you're not gonna pursue it, you should at least know that you gave it everything you could have given it, right? Like that's what I wanted. I didn't want to take an idea we all loved, and then, because we gave it such small effort, or it was out there for a week, and whatever. Because that to me would have felt bad, not knowing that we gave it what we felt it needed, and that's when we decided, should it continue or not continue. Um, and again, and over time you learn a little bit quicker, you have better intuition, you have some experiences to go along with it. In the beginning, what do you really have, right? You don't know. So yeah.
Yeah, that makes sense. I think the taking a swing while focusing on experimentation, and not just assuming you know every answer out of the gate, but taking a big enough swing that you feel like it wasn't sort of death by a thousand paper cuts, and finding the right balance between those things is tricky. To say, did we give this a good enough try? Did we put too much into this thing? Should we have maybe taken more money and put it, double down on A or B and drop C and D faster? I think those are a lot of the challenges that people who are building venture studios, or these types of, venture building groups, really, really sort of struggle with. Maybe I'll ask you about, you mentioned, it has to be big enough to matter. And then, we talked a little bit about, look, some ventures, you just couldn't figure out how to make the revenue part of it work, which ultimately is what you were gunning for, is, doubling or significantly increasing customers, which significantly increases revenue. But before you got to that stage, would have been other metrics. There were other metrics you were tracking, sort of usage and adoption and other things, more startup like metrics. I'm curious how that differed from, if at all, from how you would have been building products inside of the bank, where maybe it would have got bigger faster, focused more on the marketing side. You knew a new credit card was going to sell versus these more experimental things and different metrics you had to focus on to give yourself the conviction to pursue something.
I mean, they're different. It doesn't mean everything you do as a bank product manager is, going to work, right? I mean, but you think you have a lot of fixed assets inside of, you got a distribution system, you've got, lots of stuff when you're a big mature company, right? So the parts you're really dealing with are kind of marginal, right? Like it's, will I take, uptake? I mean, that's a question, but I think you can do a bit of a, you know, I think you could test that with customers before you put something out there. And then the assumptions that you're making around usage, there's established paradigms for margin and fees, right? You can make projections around loss rates and capital consumption and come up with like an idea of the ROE and all that good stuff. Harder to do in ventures because there's more assumptions, right? Like, I mean, you start with, can I acquire people and what's the cost? Right. And then you get to just some of the traditional product market fit. Will they actually even use it? Then you get, can I pivot them to something that is, revenue generative? And, and then you can even be like, I can get them to merchant funded. And then, so that's good. And then can I get them to on us, et cetera, et cetera. So I think it is harder to get to comfort early in something that is experimental and requires a lot of other beliefs. And again, it's all, in that case, it's all in, right? Like you don't have this fixed base of thousands of great people and, whatever. You're doing everything from scratch and et cetera. So I'd say it's very different. And it's harder for sure. But I think that's the nature of ventures. And when you look at success rates of ventures, especially the ones that go on to, kind of unicornish status and like whatever, I mean, there's a lot that don't succeed. You guys know this. I now know this. So it's, it is, it is part of the process.
Yeah.
So,
I think the key there for me, what you said, Mike, is that when you're building new ventures, particularly in this context, beyond banking, most of what you're doing is built off assumptions. Whereas when you're building a new bank product, you've got maybe not everything locked in, of course, or everything will work exactly the way you think it will work, but you have some models, be they financial models, distribution models, go to market playbooks. There's infrastructure that would say this is the right way to launch a new bank account or a new card. Whereas ventures, there's no playbooks, or there's very few playbooks for executing those things repeatably without assumptions.
Yeah. And I would say even within banking, the more far afield you go from the core, bringing it back to the name of your podcast, right? Because there's a lot of experimental stuff that you wouldn't call ventures that happens within banks, right? Like somebody enters a new line of business or they, et cetera. The more far afield you are, the more the risk increases as to whether or not it's going to work. I've seen plenty of banks launch things out there that is bank-ish, right? It's not, and they pulled it back in because it did not work. So like if you're in the mortgage business and you create a new flavor of mortgage, probably a good chance it's going to work. If you decide I'm going to get into a totally new business like buy now, pay later for e-commerce, and I mean, again, you could argue it's a bank product, it's a loan, but just because you do loans doesn't mean that one's going to be successful because you've gone farther from the core. I think that's pretty obvious. So the further ways you go from here, the more challenge, more risk, and hopefully, more upside because you're also playing in a space where maybe it's not as congested, those sorts of things.
Yeah, and you've been talking a lot. I mean, Ben specifically with respect to the venture metrics, and Mike talking about the business metrics. You think a bit about the studio metrics in more of a macro perspective. I think it was an interesting use case of how do you score points on the board for RBC? How do you value these ventures? It gave some relations to like valuations and startups that exist in the ecosystem. I think it was maybe in the second or third year you were starting to really think deeply about how these, not just how they scale, but how do we value these corporate ventures? I think it's a lot of work was done within the corporate development group and even the CVC group. I remember Jonathan Shepard and Barry Laver trying to connecting the dots. Right. What's your thought now on the outside in reflection of just even telling the story to the stakeholders and the board about the value created of RBC Ventures?
Yeah, I mean, it's obviously important, right? Because it was highly visible, and you don't want, again, in the scheme of the institution, not, at least in my opinion, not like a super material, but you want people to know the value is there, and it's difficult because you don't have a mark, right? Like you can't. It's not like an external venture where somebody writes you a check and now you mark it at whatever. And so bringing in external parties to look at them, to and also that a material source of contribution was in the form of like coming up with a proxy for a transfer price, right? Like what would this be valued at, on a horizontal basis, right? So like if you were only ever going to get 20% of a certain segment, and now with this you're getting 30, we got to discount the first 20. Can't take credit for that. That could be cannibalization. So now you're looking at 10. Now you got to say, okay, well, over time, what's the lifetime contribution of the incrementality, and what would you ascribe like a value to? And I mean, it's really just looking at horizontal economics, versus like a vertical contribution, and you'd load all of your marginal cost, you'd load in your cost to acquire, come up with it. But I just felt it was really important, no different than a venture in the ecosystem, because if you're asking somebody to give you capital, right, on the outside, you have to be able to articulate this, right? And so, to me, it was one of the more challenging things because we had a lot of people that just, really loved creating, which is great, but but we have shareholders and other people, so they like creating for creating's sake isn't going to work. So you have to, you got to put some rigor around it, and that's like what we tried to do, is to make sure that everybody kind of articulate how do you think about what we're doing economically, and and so yeah, I think it was important that we inject that, and I think we did it at the right time and maturity. So
yeah, I mean, it's amazing to reflect back because I mentioned that October offsite, and I looked back at even the calendar invite, and it said 2025, and here we are today, right? And you think about the portfolio approach, taking those bets, and look, there's been some great successes of ventures, corporate ventures scaling. There's a lot of great talent, I think, informally as well, that have spun out. I think of Amy, from Equity Homes. I think of, Derek and Adrian at Walnut Insurance. And the list goes on, right? And also I think amazing entrepreneurs. Maybe talk a bit about the legacy and kind of, some of the things that often don't get attributed to some of the success and really the efforts and the hard work that was put through during that time.
Yeah. I mean, listen, I think we hired hundreds of smart creatives. I mean, some of them I still mentor today. I am just so impressed with when you think of what they got to do at these young ages, right? Like to think about building a company from scratch, right? To think about doing a deal like M&A to augment what you're doing, and to do this at those ages, and to have and then I look at where they're at now, right? And so many of them are in like big senior roles in the bank. Some of them have gone off on their own and started things, and so I couldn't be more proud of it, because I think culturally, what they got to do there as an education, as a confidence builder, it's unique, right? Like I came up through the system, I went into like bank management training and then went into managed branch, then it was all very whatever, but to get thrown into kind of the big ocean, including getting locked in like a room with one other person that you're now calling your co-founder, trying to come up with the idea that is eventually going to have to be the thing that pays your rent. It was just different. And it was so interesting to see people thrive. And I'm just so impressed by it because we had so many, and you guys know, I mean, we had so many great examples. And it just shows, if you empower people, align at a high level, and let them go, like really cool things can happen. And they develop faster, and it doesn't like you might fail a lot, but you're building all that toughness, as you're going through. And I think it was a real character builder. So I'm incredibly proud of all of the folks that went through it. I think it was, I think it was absolutely something.
It was such an amazing blend of talent, I think, between, people who had that banking experience and other talent who were able to attract. But no, it's really amazing to see even the legacy of what was achieved with just the people where they are today.
No, I was just going to say, I mean, I come at it from a really interesting perspective, right? Traditional banker for over 30 years, get to work at an unbelievable place like RBC with a great leader and great leadership, colleagues, to do something so different, that again, I think it really at the time, and even today, I mean, I think this idea of ventures and legacy businesses, and how do you create different things, and where the world's going, it was just super exciting. Like I still get excited talking about it. And you guys were, a huge part of it, right? Because you came in when like I had no idea, like how do we had the funding phases, like, Series A, Series B replicas. And so it's it's great. And I see it all around the world today. I mean, people are still, trying to figure out this. There's some models that are amazing, where people have done like just incredibly big things, like, building in their own markets, like new, like ubiquitous things for a certain, And so I think it's a super exciting time.
Yeah. So, I mean, as we wrap this up, well, if I can ask just two questions, and smush them together, maybe. First one is, as you look back at RBC Ventures, what do you think the longer term impact beyond the ventures themselves that were built and scaled? I'm curious about your perspective on the long term impact for the company, because and part of the reason I ask that is also to get your advice for other corporate leaders at other organizations that are looking at this venture building, venture studio model, and trying to figure out what they should be doing. So yes, there's the venture building itself, of course, but question one is really long-term impact. What do you think there is there at RBC? And then second thing is, what advice would you give other corporate leaders that are trying to come up with their own venture building models?
Yeah. I mean, here's what I would say. And I would say it's not, I wouldn't attribute this to like RBC Ventures. I would attribute it more broadly. I mean, if you look at the types of innovations that have come out of RBC Borealis, if you look at, the types of ideas that have come out of Amplify, the youth program that you guys helped with, if you look at things that have happened organically within the businesses, right? Like this idea of pushing forward, like, look at, we built Amply, and Amply rolled into RBC Rewards. And now you look at RBC Rewards and, there's a browser extension, there's, thousands of merchants, it's advertised throughout the branches. I mean, that didn't have anything to do with ventures. I mean, some of it might have been informed by some of the stuff, but, this whole just changing, the speed of the ship, this idea of, getting into new adjacencies to create different economic outcomes, to enrich your products, to create better experience for customers. I don't think ventures I think different organizations have ventures, I think, was something within a great organization to begin with that had the courage to push even further, where, I think some of the successes on a standalone basis are great. Like, whether it's a Dr. Bill or a Mito or whatever, I think others maybe, are more derivative to something else that's, but in the scheme of things, I mean, I think a lot of it is just, you've got to have the right culture. You got to have the right leadership, and you got to be thinking about not just the here and now. You have to be thinking about the future, and always staying, kind of, how am I going to keep going, further and better. And I think it's just a unique organization that's got, again, I mean, just had amazing, leadership and support, and still does. I mean, as a retiree and as a customer, I mean, I see it every day, and I'm incredibly proud to have, that lion shield on my, on my pedigree. And, it's so, I mean, and that's what I mean, that I think culture and, bias and focus. And I think those are the important things for lasting success. But the list of things that organization is doing today and has done that are venture-esque, I mean, it's, again, I think it's something to be proud of.
It's significant. Yeah. Ventures wasn't built out of nothing. There was other innovation going on at RBC before. There were other types of ventures, adjacent work being done in the adjacencies. RBC Ventures was an attempt to structure some of that a little bit more. And, even going forward, there's a whole host of other things going on. So it sounds like it's part of the culture of the company to, it has to be there in order to create something like a venture studio, like an RBC Ventures to begin with. And even if RBC Ventures has evolved and morphed and things change as they always do, there's still lots of that kind of work and thinking going on within the organization.
Yeah, I mean, I think you said you hit it on the head right there, which is, I don't think you start this from scratch. I don't think you go from being, venture studio. It is a glide path from things you're doing, right? You've got a legacy business, you're doing cool innovations within the legacy business. I remember in personal finance, running the mortgage business, and then the team came up with the 60-second pre-approval calculator. At the time, those were all we didn't have a name for it, but they were pushing, right? Like, and so there has to be something culturally that propels you for this as the next evolution. You just don't wake up one day and say, this is the, the answer to the case. And so I think, so yes, this has to evolve within an environment that's conducive to its evolution.
I'm saying you have an amazing foundation and assets, that were in place to build off and evolve from there. But I think it's amazing to see even how it's continuing to evolve as well, right? And I think you really put it and set into stage. Yeah.
I meet with, I meet with the folks, regularly. The leader of RBCX. I mean, I love watching. And again, I mean, I'm probably the biggest fan. I mean, I love watching, everything that just continues to happen. And again, it shows you the power of culture and, kind of the right ability to focus on, today, to focus on tomorrow, to, to put the right investments in place and the right bone structure. And so, yeah, it's like, it's great. And I like the role that I get to play now with, with framework and on the outside, because, again, whether it's the lessons learned or, or new ideas or helping people see things a little bit differently as to, because, everybody, I want to win more customers. Okay. Well, you also have competitors. So like, what are you going to do to be, I call it defensively different. What are you going to do to be defensively different that nobody can easily match once you start? And I like helping people get out of their, their kind of box. It's fun. I mean, it's, and it's, yeah, so it's great. And then, by the way, I mean, I was just in the UK. I was in, I've been traveling a bunch lately. It's this sort of thing is, it's everywhere. I mean, it's all over the world. Everybody's trying to kind of solve the problem a little bit differently and different types of segments and whatever. And so it's a lot of fun.
Yeah, I appreciate that, Mike. By the way, I don't know, does everybody remember what the original name of RBC Ventures was?
Oh, I do.
Remember what Anthony Chan called it? Do you remember what Anthony Chan called it?
Blue Seed Ventures.
Yeah.
What do you call it?
Blue Seed Ventures.
No. They also had Northern Ventures. Remember?
That's right. That was up there. Right. We had the whole, yeah.
So I remember when we were very democratic. So I remember at the time where we said, you guys can, pitch names, and all the names came up, and I'm looking at these and I'm like, Yeah, that may be too far from the mothership.
Yeah, totally agree, Mike. I know we're almost at time. One last question for you. As you think about your work at RBC Ventures, now you think about the work you're doing as in VC. What's something that you fundamentally believe that most people in our space, venture studio, venture capital, would disagree with?
It's a great question. What's something I believe? I, I mean, I fundamentally believe beyond the core, because I
Perfect.
haven't seen anybody.
Perfect.
I mean,
Perfect answer.
I think that may be the answer. I actually think the answer is beyond the core. I think the question is whether or not you can get your mind, your heart, and your wallet, beyond the core. And there's lots of ways to go beyond the core. But, like, again, if you're sitting there struggling, how do I move the needle by more than a basis point here or there in an established industry? And you're stuck for an answer. That's kind of your answer, right? Because if it's not working with these few ingredients, I need more ingredients. And so, and it's not that there couldn't be some big, revolution, which just takes the world by storm. But it hasn't happened in 30 years. I haven't seen it, and I can't imagine what it is, because it really means you have to have a piece that none of the other people have, right? And so that's kind of the point, right? Like, I mean, because if it's about fees and margin and distribution and whatever, everybody can have that. It's just where you set your dial. And, and that creates the playing field of today. But that idea that it's going to be breakout, defensively different, it doesn't affect your margin, it's all positive, then yet you're seeking a different, you're seeking something new. And I would also say that when you think about the margins of business in the world, there's money being spent that maybe is being spent inefficiently. And so if you could figure out a better way to connect the dots and repurpose the economics, like introducing your businesses to your consumers, where normally your businesses would have to pay, online advertising to find them. Well, it's new money. And if you can uniquely find it and stack it, you've created value that is, in essence, defensively different. And so it's the pursuit of those things that I think is, there. And since I know we're at time, I am going to just say this, a little plug for you guys for, Beyond the Core. I really can't overstate the role you played, as challengers, as supporters. This is not something I think companies can just jump into. It requires facilitation. No different than the point I just made, that you got to kind of look outside. And I think you guys played that role. In fact, you both played different roles. And I've obviously been, a big fan and, advocate for what you do. And I'd say, if you're out there in your company and you believe, the point of, we don't know what defensible difference is, we are in a semi-commoditized, but you can at least accept and have a belief that there's a different answer. You don't have to know it. You don't already have to be conditioned to thinking about it. You just got to take the first step, right? Which is bring in a different thought process. Like, just invest a little bit of time to just do the what if, because you may just find that, once your brain is out of the here and now world, you come up with a whole new set of ideas in the, in the adjacency world. And then it just takes, again, conviction, put your shoulder into it, etc. So, I'd endorse anybody that's not doing it to, at a minimum, think about it.
Yep, I totally agree with that, Mike. And I won't ask you which of us you enjoyed working with most. We are out of time. Thank you so much. Super interesting conversation. I'm glad we got to dig into a bunch of really interesting and key topics. So thank you for your time.
Yeah, so you guys take care.
Much appreciated, Mike. Thank you. We owe you at least one seafood tower.
Take care.